Good morning, everyone. Happy Feel Good Financial Friday, coming to you live at 8:52 a.m. on this 8th day of July, 2022. With me, my co-hosts extraordinaire as always, Kim Lanciel, financial literacy consultant, and Sam Castellan, real estate development expert. We just had a Jobs Friday. Let's see. 22 minutes ago, non-farm payrolls came in 372,000, a little better than expected. Unemployment rate held steady, 3.6%. The question on market's mind, on everyone's mind, are we in a recession? Because if we are, this recession looks like no other in recent history. Jobs are still growing. Futures not doing much, down a little actually on the news, but this is definitely not a sign of a recession. What could be, however, is that this week, following last week's trend of commodities lower, some are calling it a commodities crash. I mean, you've had some ags, wheat, corn, I know oil, natural gas, all down in excess of 20% or nearly 20% or more in the last 2 weeks, which is indicating a slowdown. However, I'm sure like most of us, when you're going to the grocery store or the restaurant or many other services, Kim, are you seeing easing in prices at all out there?
Not really. I can't say that I am at all. We recently have been doing some upgrades on the house and having to buy some extra additional purposes because it's our second home. And so I found myself at the big box stores quite a bit, including, some of the home improvement stores because of different things that we have to buy. And nope, I'm not seeing any prices at all. One thing I am kind of seeing, and what I have heard, is that there's a little bit of, slowdown in regards to hiring for these big stores. So what does that mean? That means I was waiting a little bit longer in line, and the self-service ones, there's a little bit longer of a line there as well. So that's just kind of interesting to see what's happening. And if we are indeed in a recession or on the way there, it's kind of confusing to the average consumer. So I don't really know what to say about that other than my own kind of like personal experience. So, this is all, I guess, a reason that the Fed is showing, steps to trying to slow things down, curb this inflation. And, where does that leave the average consumer? We kind of have to think about it, personally. We have to look at our own outlook for our own investments, for our own spending, and for our own savings. So based on that, what are we experiencing? Are we going to experience it? Is it going to be official R word, recession? I'm not sure. It's not uncommon. And like you said, it doesn't really define what a normal inflation recession would be. So here we are. The whole idea with all this is, with anything, even when you're trying to do personal finance, you need to really kind of stay the course. We need to, look at our own personal portfolios. What is our own litmus test? Our personal, investments, that type of thing. And, stay the course. Don't look at everybody else's. Don't compare yourselves to the markets. Budgeting. What do you need to do? I went to, made several. Unfortunately, I had to go to several times the big box stores. And what did I do? I brought my list. I made sure that I budgeted, and I, my non-discretionary spending, I had to be very careful with that. And, the fun stuff out there, going to the restaurant, cutting back a little bit, even like a little bit more, our travels, we reassessed what we're going to spend for our September. We actually had to do a complete travel change. And, that's all okay. We're just, buckle down, tighten my seatbelt. It's okay.
It is the uncomfortable, necessary steps that we all have to take sometimes when times get a little tougher, or there's a increased budget at hand. Speaking of commodities coming down, the one thing that led everything lower, thankfully, was a relief in rates. A few weeks ago, it wasn't that long ago, we were talking, I believe Thursday was the high that we hit that week in rates of nearly 3.5%. We talked about it right here that Friday morning, and we have eased. The 10-year is down. We were sub 3% earlier this week, which led in a nice jolt to growth in tech stocks the last 10 days or so. We're a little over 306 right now on the 10-year. Now, how that translates into real economy, and all of us, especially first-time home buyers or those refinancing, is that this week you've had the largest decline in the 30-year fixed mortgage, falling all the way to 5.3%. And it was just at 6.3, I think, 2 weeks ago. So that's a positive. Bitcoin's gotten a bid. We're back over 21,000 after touching 17,000. We called it a crypto crash. Sam, you hit on it a few weeks ago. What are you seeing out there in real estate land, Sam?
I mean, look, as you said, this is like a recession like no other, right? Like we are seeing some positive news out there. Yesterday we saw that the mortgage rates, I guess, went down for the first time in a long time. So it went down from 6% to 5.3. So I think that that's a positive effect. We were actually seeing some layoffs from some of these major real estate sales firms with hundreds of agents being laid off in the last few weeks. And so I think that it was like they were preparing for the worst, right? And rather now we're starting to see that maybe we can start seeing some positive effects. Maybe the market is, it's growing in inventory now. So I guess that's going to hopefully lead to a reduction in the cost of the market overall. So maybe we'll start seeing again interesting people trying to get a mortgage at that hopefully lower end mortgage. So we're seeing some positive news, and as well in the crypto market, as you said, like things are not that bad anymore. So I think that that's showing some positive strength effect. And to Kim's point, I think that this is that recession as no other. Let's call it like that. Where still the market is hot. People are still, the number of people that are without a job is like very, very small. I think that it's around 3% right now.
Very low, 3.6% unemployment rate.
So the market's still hot and people are still making some money. So I guess it's just a matter of organizing our personal finances, Kim described. And, if you cut some, unnecessary expenses here and there, we can still make it through these tough times. So that's, I guess, the positive news now.
Have one less drink this weekend. That usually will cut it out at the restaurant. All right. Well, it is Friday morning. You guys do anything fun this weekend? What is on tap?
It is a fine feel-good financial Friday.
Hey,
so
there you go.
There you go. So I am doing exactly what we should be doing. Instead of going out to the restaurant, I'm going to be hanging out. Friends invited us over for a barbecue, going to swim in the pool.
Awesome.
Why not?
Perfect activity now that we have officially hit the dog days of summer. Sunday morning breakfast at Wimbledon. Unfortunately, Rafael Nadal will not be playing as he exited his match and had to step away due to injury, but it'll still be going on that Sunday morning. And with that, thank you for joining us, and adios.